Hello friends, myself SUBHASH NAGARSE from Sri Digambar JAIN GURUKUL High School, Solapur. I shall welcome to all of you in this online session of 10th Mathematics Part 1st of topic Financial Planning Part 5. Friends, in the previous session we have been discussed with the following important subtopics of this financial planning: features of GST, types of taxes under this GST, shares, the rate of return, and few problems based on the above content. Friends, today we will continue with brokerage. What do you mean by brokerage? That we will discuss. We directly can't go to the stock market and buy or sell shares. Only the registered members or organization, that is agency of the stock market, can buy or sell on our behalf. So these members are called as share brokers. For catering the services of this buying and selling of the shares, they charge some amount which is called as brokerage. Brokerage is paid on the market value of the shares. At the time of buying the shares, the equation would be buying price of one share is equal to market value plus brokerage. At the time of selling the share, the equation will become selling price per share is equal to market value minus brokerage. So friends, GST on the brokerage services. Share brokers provide services for purchase and sale of shares for their clients. These services are charged under the GST. So rate of GST is 18% on the brokerage. Mutual funds. MF. In mutual fund, many investors with common objectives give their money to the professional experts. They not only invest in one type of the shares but also invest in various other schemes. As a result, investment is diversified, which reduces the risk factor, and total dividend or profit is divided equally among the investors. So mutual fund is professionally managed investment scheme, usually run by an AMC, that is asset management company. They invest the money given by the investor in different schemes. For example, equity fund is there in shares, debit fund is there, that is in debentures and bonds, etc., or balanced funds as per the investor's choice. We get units when we invest a mutual fund. The market value of a unit is called as NAV, that is net asset value. So this NAV of unit, net asset value of one unit into number of units, is equal to total fund value. This is an important formula while solving the problems. So friends, now what do we mean by this systematic investment plan, the SIP? One could invest small amounts at regular intervals, that's monthly or quarterly, in mutual funds. This way of investment is called as the systematic investment plan, that is SIP. Investment in mutual funds through SIP for a long term is beneficial. It protects investor from the market fluctuations or variations. Now let us discuss these problems based on this content. So number 1, market value of a share is rupees 200. If the brokerage rate is 0.3%, then find the purchase value of the share. Friends, here market value is rupees 200 and brokerage is 0.3%. So brokerage per share will be equal to rate of brokerage into market value. Yes, now we'll substitute the values, which will be equal to 0.3% of 200, which will be 0.3 upon 100. 0.3%, 0.3 upon 100 into 200, which will be 0 goes 0.3 into 2. So brokerage per share is rupees 0.60 or 60 paisa. Now purchase value of the share is equal to market value plus brokerage. Therefore, here 200 plus 0.60, that leads to rupees 260 paise. Therefore, purchase value of the share is rupees 200.6. Now let us consider problem number 2. A share is sold for the market value of rupees 1000. Brokerage is paid at the rate of 0.1%. What is the amount received after the sale? Friends, here market value is rupees 1000, brokerage is 0.1%. So brokerage per share is equal to rate of brokerage into market value. Therefore, brokerage per share will be 0.1% into 1000. Therefore, 0.1 upon 100 into 1000. 0 goes. So 0.1 into 10. That leads to brokerage is rupees 1. Therefore, selling price will be market value minus brokerage. Therefore here 1000 minus 1, that is rupees 999. The amount received after the sale is rupees 999. In the previous problem, there was a purchase, their brokerage is added in the market value. Here the selling is occurred, therefore brokerage has to be reduced from the market value. Now problem 3. Srimati Desai sold shares of face value rupees 100 when the market value was rupees 50 and received rupees 4988.20. She paid brokerage 0.2% and GST on the brokerage is 18%. Then how many shares did she sell? Friends, we start. Suppose Srimati Desai sold 1 share. So brokerage per share is equal to rate of brokerage into market value. Accordingly, substitute the value 0.2% into 50. So it will be 0.2 upon 100 into 50. So that leads to 0.1 into 1. So it will be 0.1 rupees. GST at 18% on brokerage equal to rate of GST into brokerage. 18% into 0.1, that will be 18 upon 100 into 0.1, that will be 0.18 into 0.1. 0.18 now 18 upon 100 is 0.18 into 0.1. So GST at 18% on brokerage is equal to 0.018 rupees. Friends, now selling price of one share is equal to market value minus brokerage plus GST. Therefore 50 minus market value 50 minus into bracket brokerage 0.1 plus GST 0.018. So it will be 50 minus 0.118. So which will be equal to rupees 49.882. Friends, if Srimati Desai sold X shares, then selling price will be number of shares into selling price of one share, which is equal to amount received by Srimati Desai selling price into of one share. So it will be 4988.20 is equal to X into 49.882. So which will be X is equal to 4988.20 upon 49.882, which will equal to, now we'll multiply N and D by 1000. You are getting 4988200 upon 49882. So after getting the division, the result is 100. Therefore Srimati Desai sold 100 shares. Now consider one more problem. Mr. D'Souza purchased 200 shares of face value rupees 50 at a premium rupees 100. He received a 50% dividend on the shares. After receiving the dividend, he sold 100 shares at a discount of rupees 10 and remaining shares were sold at a premium of rupees 75. For each trade, he paid the brokerage of rupees 20. Find whether Mr. D'Souza gained or incurred a loss. By how much? Friends, here we get face value rupees 50 and premium rupees 100. Therefore, market value is equal to 50 plus 100, that is 150. Investment by Mr. D'Souza for purchasing 200 shares is equal to number of shares into market value 200 into 150, that leads to 30,000. It is wrote in red color purposely, that you will come to know later on. Also, dividend is equal to 50% and market value is face value is rupees 50. Therefore, dividend per share is equal to 50 upon 100, that is 50% into 50, that will be 0 goes 5 into 5 is rupees 25. Dividend on 200 shares is equal to number of shares into dividend. So number of shares is 200 and dividend just calculate 25. So that leads to 200 into 25, that is 5000. Equation 1. 100 shares sold at a discount of rupees 10. Therefore, selling price of 100 shares is equal to 100 number of shares into its rate dividend, that is 50 minus 10, which will equal to 100 into 40. Therefore, selling price of 100 shares is rupees 4000. Amount received after selling 100 shares is equal to selling price minus brokerage. So 4000 minus 20, that is 3980. This is equation 2. 100 shares sold. Now remaining 100 shares sold at premium rupees 75. Selling price per share is equal to 50 plus 75, that is 125. Selling price of 100 shares will be 100 into 125, that is 12,500. Amount received after selling 100 shares is equal to selling price minus brokerage. So brokerage is rupees 20. Therefore 12,500 minus 20, that will be 12,480, equation 3. Total amount received, how much amounts? Dividend 5,000, 100 shares selling 3,980 plus remaining 100 shares sold 12,480. So total it will be amount received is rupees 21,460. Friends, this also shown with red color. Previously I told there is one red color, here is one red color. Investment minus received, will get the loss because investment is more 30,000 and loss is received is 21,000. 30,000 is more than 21,460, therefore loss occurred. So loss is equal to investment minus amount received, 30,000 minus 21,460, therefore loss will be 8,540. So here Mr. D'Souza suffered a loss of rupees 8,540. So what we have been discussed today is first brokerage, then GST on the brokerage services, mutual funds, then systematic investment plan, and the problems based on this above content. So you understood all very well. Then try these following problems. First one, suppose if the face value of the share is rupees 100 and market value is rupees 150, let the rate of brokerage be 0.5%. What amount should one pay for purchasing 100 such shares? What amount should one receive after selling 100 such shares? Second one, Bashir Khan purchased 100 shares of market value rupees 40. Brokerage paid at the rate of 0.5% and rate of GST on brokerage is 18%. Find the total amount he paid for the share purchase. Third one, Pankaj Rao invested rupees 1,25,295 in a share of face value rupees 10 when market value is rupees 125. Rate of brokerage is 0.2% and GST is 18%. Then find number 1, how many shares were purchased. Second, the amount of brokerage paid, and third, GST paid for the trading. All these problems are very easy. You try for them. Certainly you can solve. Before closing, you should not forget the famous word by Helen Keller. The only thing worse than being blind is having sight but no vision. So friends, if you have eyes you can see, but vision is important. You come to know the importance of these words. So if you like this video, please subscribe and share. With these words, I would like to say thank you.